Coming next week, we are going to have the holy grail of earnings that will come out. If you don't know, it's nvidia. Nvidia is actually pricing in the biggest earnings move in the past 3 years, pricing in almost 12%. Now, as I have explained many times, nvidia is not Tesla, but these two names really go hand in hand as of lately. Money has been sucked out of Tesla's stock, put into nvidia. If nvidia does fall, well, that could be a positive for Tesla. And as you have probably heard me say already, I do believe nvidia is going to fall after earnings. The law of large numbers is really going to start hurting nvidia. We are going to be going over why I expect nvidia is going to fall after earnings and what kind of effect this could have on our markets as well as Tesla stock. And beyond just that, we'll take a look at some very scary charts. Let's be honest, I'm not going to sugarcoat it. These charts are scary. Insiders are selling stock at the most aggressive pace that we have seen in many years. Considering we just got a lower than expected, almost crazy low number. Considering we just got a really bad retail sales number, CPI came in hotter than expected, and PPI today came in, again, hotter than expected, maybe the economy's set up for a little bit of disappointment here, and that's something we also need to talk about. Good news is, if markets do fall, Tesla is probably a little bit more insulated than your average stock. So, ladies and gentlemen, the work is cut out for us here in this video. Hit that like button as well as subscribe to the channel, and let's get started. So first things first, I think it's important to go over the basics here. Now, I've talked about this before here on the channel, so we're not going to talk about it for too long. If you've already heard me explain this, then just skip ahead maybe a minute or two down this video, and we'll get started on some newer information. But you have to understand the mechanics of what is going on to understand why I'm talking about nvidia and Tesla. Of course, if nvidia, let's say, does fall 12%, 11%, as the options markets are pricing in as a probability or a possibility, then yeah, that's going to have a big negative effect on the S&P and the NASDAQ. I would expect the NASDAQ and the S&P would do very bad if nvidia fell that much. But it's also important to understand what's been happening internally in the markets. First thing you have to know, we have really not seen inflows to our markets. Take, for an example, 2022. That was a year in which everyone was plowing money from the sidelines into stocks, from cash piles, from bonds. There used to be a saying called TINA. There is no other alternative. Today there is. There's $6.3 trillion in money market funds that is not coming into markets. You've actually seen about $40 billion worth of outflows in our markets since the start of 2024. And look at what stocks have done. They've ripped to new all-time highs, still sitting around all-time highs at the time of recording this video, over $500 on the SPY. Now what's happened is, I explained this in quadrants. You have the lower end quadrant, your bad companies, your small cap companies, companies people are not rushing to own right now, interest rate sensitive names. Your mid quadrant is like your mid cap companies. Put a Coca-Cola in there, if you will. It's a good company, but people are not running out to buy a Coca-Cola. You put a Yeti, you put a Crocs in there, you put a PayPal in there. These stocks have really not done all too much. You have your higher end quadrant, which is like your big tech names, the names that control the broader markets. Money has gotten sucked from the lower two quadrants into the higher end quadrants that have the market weighting. Nvidia's 5%, Apple's 9%, Microsoft's 10% of the NASDAQ. So you get this effect of pushing the index higher, but you're really just getting concentration. Now, on days in which you are seeing Nvidia sell off, you are seeing a broadening out of our market. Same is true for big tech. Take yesterday, for an example. Yesterday, the S&P actually did pretty well, but if you take a look at like big tech, let's pull up nvidia. Nvidia yesterday was down 1.68%. Tesla stock was up about 7% yesterday, right? Back on really February 6th, this became obvious when Nvidia was down 4% at one point in the day, and Tesla totally turned around at that point. Once the momentum stopped in Nvidia, Tesla started to do well. Same is true if you look at, well, today is going to be a little bit harder to actually show, but IWM, right? Take for an example on February 6th, IWM had hit a low of about 192. Today it's 203 on the ETF level. That's, albeit considering the bad data that we have gotten recently. Even yesterday, though, nvidia was down almost 2%. The Russell was up almost 3%. So as your big tech names sell off, the rest of the markets are broadening out. And I think that is a main component to getting the markets to broaden out until capital comes from off the sidelines in cash or in bonds back into stocks. That's going to happen if we either confirm or deny we're heading into recession. Markets want clarity on that. They also want more definitives from the Fed. Are they going to start cutting rates soon? How many times are they going to cut? Are they going to stop quantitative tightening? There's a lot of questions there that keeps cash off the sidelines. So I'm really not even talking about new money coming back into our markets. It's a dispersion of big tech, nvidia, AI names. If they fall, Tesla can do well. Small caps can do well. That's potentially what we're looking at in this next upcoming week. Now let's take a look at what the markets are pricing in for NVIDIA's earnings. This article says, as earnings loom, NVIDIA option traders brace for a monster share move. This says traders in the U.S. equity options market are betting NVIDIA's upcoming earnings report could spur a massive move in the shares of the world's most dominant artificial intelligence chip maker. NVIDIA, up about 50% this year, could see its shares swing by about 11% in either direction following its quarterly results on February 21st, according to data from options analytics service ORATS. That's the largest expected move options traders have priced in ahead of NVIDIA earnings over the last 3 years, and well above the stock's actual average earnings move of 6.7% over that period. With NVIDIA's market capitalization at $1.8 trillion, a move of that size would make a potential swing in market value of about $200 billion. That would be greater than the market capitalization of chipmaker Intel and larger than the respective market values of about 90% of S&P 500 constituents. Now, I think that $200 billion number is pretty interesting because that's almost exactly the amount of market cap Tesla stock has lost since NVIDIA started going parabolic, from $265 down to where we are at about $200 in the 190s. Tesla stock's lost about $200 billion of market cap value. Now, is all of, let's say if NVIDIA does fall 11%, is all of $200 billion going into Tesla? No, but I explained it in the last video. Like, let's say you got some magnets here, right? You have a really strong industrial grade magnet here. You got some fridge magnets over here. You start throwing some metal, at these magnets. The industrial one's going to catch most of it. The others are still going to get their share. But that's the way that in analogy terms of what I think could happen. Tesla could get a lot of the money going back into it, but your other names could also, and that's where you could potentially see a broadening out of our markets based on NVIDIA's earnings, if, of course, the stock does fall. If NVIDIA rallies 11%, you're probably going to see the same or potentially more than that, even less than that. Any kind of rally after NVIDIA earnings, solidifying that, this is a stock everyone needs to FOMO into, well, it's going to pull more money out of stocks like Tesla and out of your small caps. Now, on Thursday, so yesterday, more than 750,000 NVIDIA options have changed hands by 1 p.m., making it the second most actively traded single stock name in the options market. Despite the sizable run-up in the stock, demand for upside options bets on NVIDIA remains intact. With one measure of sentiment, the stock's 90-day 25 delta call skew near a 5-year high, according to Susquehanna analyst. I don't know if I'm saying that right. I've never been able to pronounce that right. Quote, the elevated call skew tells us that investors still see the potential for significant upside despite the move already made, and that there is significant demand for upside exposure as some who may be fearful of the high volatility turn to upside calls for lower risk exposure. So instead of, buying 100 shares of nvidia to get into it, you can go at the money and buy an option, which gives you leverage to control 100 shares without actually putting up, 100 shares worth of capital. So a fraction of the money lets you control, 100 shares equivalent of nvidia. Now, nvidia is expected to post earnings of $4.56 a share and a rise in quarterly revenue to $20.378 billion from $6.05 billion a year ago, according to the mean estimate by 33 analysts based on LSEG data. Now, keep in mind, nvidia is probably going to beat these numbers. I would imagine nvidia could come in around, 21, 22 billion for top line revenue. EPS is more than likely going to come in above $5 per share. That doesn't even matter. I don't really think there's going to be a number there that will move nvidia's stock. It's all about the guidance, but the growth rate as well. Because last year, nvidia did 6.05 billion. Now they're going to do 20 billion. So just some rough numbers here, that's almost 400% year over year growth. Now, for nvidia to do 400% year over year growth again, nvidia would have to guide for like $80 billion for Q4. So that would have to be like a guide of like 35 billion, quarter after that a guide of like 55 billion, and a quarter after that a guide of 80 or so billion dollars. It's not going to happen. So the law of large numbers starts to make the percentage a lot lower. Now in this market, a lot of what dictates a stock is going to be EPS. If they can grow their EPS at a big clip, that is going to, probably be more important than the revenue growth, because that means the stock will become cheaper if EPS grows more than expected. Now, this article, of course, I cannot read it because I'm not a member of Seeking Alpha, but it says NVIDIA stock, UBS note should raise alarms. Now, UBS came out and said, based on customers that UBS is talking to, NVIDIA's lead times have gotten a lot smaller. So I actually screenshotted the summary of that note just to share it with you guys. It says UBS raises NVIDIA Corporation's earnings estimates and price target, but warns of near-term trouble for growth due to decreased lead times. Now, UBS actually was positive in their note. They said that they think this means shipments and production can grow. Not that, we're seeing a demand problem at this point. It says, NVIDIA's lead time for GPU's orders have decreased from 8 to 11 months to just 3 to 4 months, indicating a potential future sequential growth peak. While NVIDIA's current growth appears strong, the stock may not be priced for the end of its growth, posing a risk for investors. And it's kind of like if you get a new technology, right? If you get a computer, how often are you going to buy a new computer? I mean, if you don't have one in this day and age, you got to go buy a computer, right? Or if your job demands it, you got to go buy a computer. But how often are you really upgrading your computer? And once you have your computer, don't you use it for a while? So what's happened is NVIDIA has seen this boom over the past year. I mean, it's been a year now of NVIDIA and this boom in generative AI. A lot of companies likely already got their GPUs. Of course, there's going to be companies that are getting some, the same companies that already bought some, like Meta and, Apple, Amazon, your big companies, Tesla, that will, buy new GPUs, right? That will trade out their old ones if one burns out or whatnot. But for the most part, you've probably seen most companies already get their hands on GPUs. So the guidance is going to be important. UBS said in this note, they think NVIDIA can guide to $25 to $26 billion. Now, that really wouldn't be too impressive growth. That would be like 20% growth. And you're coming off of some big growth numbers. So does 20% growth in your guidance, potentially from NVIDIA, justify where the stock is at right now? Probably not. And what will really determine what happens with NVIDIA stock is, do we get a growth fear or not? Fear of growth slowing down. Right now, it's been full, steam ahead, pedal to the metal, raise price targets. NVIDIA is going to grow forever, is what it seems like the markets are saying. And I'm bullish on NVIDIA earnings. I just think the markets are expecting too much. Now, that brings us to the most important part of this conversation. NVIDIA actually sells off after earnings. most of the time. Now, nvidia 3 earnings ago, when they really shocked the world, I've talked about this before many times here on the channel, sold off about 9%, 8.5% over the next couple of weeks following their earnings. And we could probably pull this up on a weekly. No, we can't, because we don't have the earnings date. So nvidia sold off about 8, almost 9% 3 earnings ago. 2 earnings ago, nvidia sold off, and you guys probably remember nvidia was up like 10% in pre-market and instantly sold all of that off, barely closing positive, 0.1% by the end of the day. Right? Next day was down 2.5% on stellar earnings, stellar guidance. But nvidia, long story short, ended up falling about 22% from August until October. So about 2 months there, fell about 22%. Last earnings, nvidia, same thing. Did fantastic, did wonderful. The stock sold off 2.5% the next day because expectations were so high. And that's just when the stock went from 392 to 500 before earnings. Let alone the stock has went from last earnings until now from, I mean, if you're counting around here, around $500 to $737, right? But anyways, last earnings, nvidia did end up selling off about 10% or so over the next 2 months after earnings. So nvidia doesn't necessarily plummet after earnings, but the stock does tend to go through sell-offs over the next 4 to 8 weeks after they report earnings. And it's been pretty much straight up with nvidia. So could nvidia fall 10% this time around? Of course. The other thing I want to point out is when everyone is so bullish on a stock, typically that's not the result that you tend to see. Think about it like this. If you had a bet that, Taylor Swift was going to kiss someone else. I heard about this bet just actually today, that there was actually a bet that Taylor Swift would kiss someone else besides Travis Kelce at the Super Bowl. And, what would happen? Obviously, the odds of that are low. So what? You put $1 in, you might get paid out 50 grand if you win. But everyone's like, yeah, that's not going to happen. So the odds are very low. So what happens? The majority that says that's not going to happen, right? Their payout is basically nothing, right? So if you have everyone on one side of things, you're more likely not to win. Or if you are, you're likely to not get a big payout. Now, for people that do hit big trades that are on the right side of things, that'd be like a contrarian view on nvidia, saying maybe the stock falls, you could get paid out big here. In other words, if everyone is bullish, the stock's probably not going to go up in a substantial way. Could it go up a little bit? Of course. Is it going to go up 11%? Highly unlikely. Now today, Loop Capital has initiated nvidia coverage on nvidia with a buy rating of buy and $1,200 price target. And Bank of America says nvidia remains a top pick ahead of fiscal Q4 results. And of course, again, everyone's so bullish, your odds of getting disappointed are a lot higher. Now, if people were neutral on nvidia, if people were kind of bearish on nvidia, this would be a totally different video, okay? And I think nvidia is going to kill it. I think they're going to guide huge. I think they're going to beat numbers huge. But I just don't think that's enough at this current moment in time. The question is, does nvidia collapse after earnings? Does it fall 10, 20% after earnings? That part really is all going to come down to growth expectations. Do we see a growth scare or not, like I previously mentioned? If we don't, and we just get really good numbers, nvidia is probably going to sell off like 2 to 3% the next day. If there's growth fears, you're probably going to sell off 10 to 15%. If something is somehow really bad and nvidia says, yeah, a lot of people bought their GPUs, we're going to go through a slow time here, and maybe they give you a guidance that's like 20 billion, like the same as last quarter, people are going to say there is no growth on a quarter-over-quarter basis. Nvidia is going to fall 20 to 25%. That seems the most unlikely to me. But still, it's something that possibly could happen. Now, if I were to sign a base case on this, nvidia probably falls 2 to 5% on Thursday, the day after nvidia's earnings that are on Wednesday. That, in and of itself, will be big for Tesla stock and for other smaller cap names, as capital leaves nvidia and will head elsewhere. Now, again, just to show you how bullish people are on NVIDIA, here's the option activity in NVIDIA stock. And over the past week, you have seen 6,212 orders from hedge funds and institutions, totaling $5.37 billion with a positive order value of 90%. 90%. That's insane. Now, short positions in NVIDIA, last I checked, were very low, about 1.17%. Of course, I mean, why would you want to be short in NVIDIA? But just take that for context. 90% of option trades from hedge funds and institutions were bullish last week. Now take a look at Tesla. 5,292 orders, totaling $4.57 billion, with a positive order value of 48% over the past week. I mean, what stock do you want to bet on here? Tesla or NVIDIA? I'll tell you right now, I want to bet on the dog of the two. Right, and sometimes that's why, you know, the underdog gets rooted for so much in fights or football games or whatever it is, because, you know, you usually don't want everyone to be right, just psychologically speaking. Now today, Tesla's seeing a lot of positive option activity with 1,076 orders from hedge funds and institutions, totaling $269.5 million, with a positive order value of 67%. And it does seem like quite a few people have started to pick up on this trade, go long Tesla, short NVIDIA. So I personally think, my opinion, if we just get the same old, really good earnings, really good guidance, NVIDIA probably falls back to about 630. Decent little gap to fill here. That would erase gains you've really seen over the past, let's see, 2-ish weeks, three weeks or so. That would put you at about 620, 630. Now, if things are not so great, then you could erase the last 1, 2, 3, 4, 5, 6 weeks of gains, and that could put NVIDIA stock back to about $500 per share. Now, I find that a lot less likely, but that would be basically erasing this blow off top kind of gain that you have seen. And that probably only happens if you do get a growth fear in NVIDIA. Now, I will also tell you the RSI on NVIDIA on a weekly basis is 84. Anything over 70 is usually a, you know, maybe we should reduce some risk here. The stock's getting a little toppy. On a daily candlestick chart, NVIDIA's RSI is about 78.64, which is also very much on the high side. So I think the odds are stacked against the bulls here, but would I love to see NVIDIA go higher? Sure. If NVIDIA does go lower, that's going to be a big positive for Tesla. Now, what would I expect to actually see from Tesla if NVIDIA does fall a little bit? Well, I think Tesla can have a 2 to 5% day. Let's be honest. I think Tesla could have a 2 to 5% day. Probably closer to about 2.5%. At least initially, just as some new money comes back into Tesla. Let's say NVIDIA falls 10%, which seems unlikely, but let's just say that happens. Then I'm looking at a 5 to 6% move again, kind of like yesterday. That would theoretically put Tesla stock, if NVIDIA falls 10%, Tesla rallies about 5%, that would put Tesla at about 210. Roughly. Now, if NVIDIA were to collapse and let's say fall 20% and you did see a big dispersion of capital in our markets, Tesla would likely get a lot of that money back into the stock. After all, a lot of money has left Tesla and went into NVIDIA. They were even talking about this on CNBC, how it seems like Tesla has lost value and NVIDIA has gained Tesla's lost value. That money has left Tesla and went into NVIDIA. And they were actually talking about that, you know, Tesla looks more attractive. That's 2 videos ago here on the channel if you guys want to watch that clip from CNBC. Now, if a 20% drop happened in NVIDIA, I would expect around a 7 to 8% move higher in Tesla. Just, you know, marginally getting some of that $200 billion of value that's lost Tesla back into the stock. And let's be honest, nothing has changed with Tesla fundamentally. If anything, there's really good signs Tesla's going to start focusing on profitability. Now, the next step of this is you know, what happens following a drop with NVIDIA. And I think eventually the markets will come to realize, well, Tesla is the biggest AI play out there, right? After your GPU craze is done and over with, could be this quarter, could be the quarter after that, could be the quarter after that. Who knows? Could be a year from now before the GPU hype bubble, if you will, is over with. But eventually it will end, and then markets will say, hey, who's next in the AI, right? The AI revolution. Tesla's already there. Like, Tesla is not a company promising things. Tesla is a company delivering on things. And that is FSD, that is Optimus. And I think that will demand a large premium from the markets when that happens, especially if at the same time, let's say 3 months from now, Tesla announces price reductions or staff reductions, layoffs, in other words. They no longer cut prices. Maybe on the next earnings call, they give us a commitment that margins are not going lower. If you get that good backdrop behind AI kind of FOMO, real world AI FOMO, that I believe will take place in Tesla, you could see Tesla's stock soar from here. Now, we'll talk about the real AI, potential and what kind of value that could add to Tesla stock here over the next 3 to 12 months. We'll do that in the next video, likely coming out tomorrow, but there's so much to go over in regards to that. You really got to make its own video just dedicated to that. So hopefully I see you guys there, but there are also some very worrying signs for our markets right now. Now, this chart shows you insiders that are selling out of the markets. These are CEOs, CIOs, COOs. These are, your important individuals in a company. CEOs, chief financial officers, chief operating officers, not your lineman at Tesla that might have some stock, or a plant manager that has some stock in Tesla. These are like your big guys. Take a look where my cursor is. This was this same period last year. You typically see a spike, to start a new year, as there are selling or is selling that takes place for like tax purposes or whatever else, right? A lot of reasons why people sell stock. But when you see something like this, and you pair that with bad retail sales, higher than expected CPI, higher than expected PPI, you start to really question what is the motivation or motives behind insiders selling this much stock. And it's not a good thing. Now, you obviously cannot draw any definitives from this, but it is something I wanted to let you guys know that insiders are selling. It's probably some time to get some cash ready on the sidelines if we do go through a worse economy or worse downturn in the markets. You also see that Chapter 11 bankruptcy filings are rising rapidly since really November of 2023. You've seen a big spike here. You're now higher than pre-pandemic levels. Now, you're not at a dangerous level, right? Back here, global financial crisis, you were seeing, over 1,000 bankruptcies, what looked like on a, couple month period. Now you're at about 700. They are starting to rise, something to be watching. And the M2 money supply, the annual growth, is now hitting levels you have not seen since the Great Depression. You're actually at about 5% contraction year over year in the money supply. This is at a time where stocks are at all-time highs, real estate is at all-time highs, and people apparently feel better about the economy than they have over the past couple of years. Eventually, all of this will turn into a negative. Just when does that happen? Is the Fed too late to start cutting rates? Those are, answers I don't have. Let me know down below in the comment section. What is your opinion? And if you guys would like to come see all of this information, all these charts, different opinions over on X, my name's Michael Tyler. Go ahead and give that account a follow. It's free 99 to do so. If you guys would also like to come trade with me live in real time, check out that link down below in the description of this video. We did hit the SMCI puts this morning, and now SMCI is down about 19% today. So what a rough day for the longs in SMCI. Hopefully some of the SMCI talk that I've talked about over the past couple of days has helped some of you guys save some money. It was only a matter of time before that stock utterly imploded. Nonetheless, guys, that is going to do it for this video. Let me know your opinions on all of this information down below in the comment sections. Is nvidia going to have good or bad earnings? How is that going to affect Tesla? And I expect a lot of people to be bullish on nvidia down below in the comment section, and that's probably going to make me even more bearish on the stock, let's be honest. Thank you for watching. Enjoy the rest of your day. My name is Michael Tyler. I will see you in the next one.